Hi guys, I'm thrilled to be able to share a strategy that can get you mortgage free by buying and selling a condo at a profit. Most people fret and fuss over a cash flow portion of an income property, but I have a hard truth for you. Unless you put down 30 to 35%, your rental property will not cover the carrying costs. It's a tough one to swallow because people expect income properties to pay back the instant they get into them. So let's change that conversation a little bit. This is a great strategy for people who want to pay down their mortgage but don't want to move, and still profit from the crazy Toronto condo market. There is so much demand for these units. Do you know that 46% of Torontonians rent and rental vacancies are less than 1%? And rent prices are at an all-time high? There's some rather complex but very important math on how the numbers work out. Let's look at what the numbers looked like 3 years ago for a condo that was for sale. Let's say the condo was purchased in 2015 for a purchase price of $375,000. Condo fees were $350 per month and taxes were $2,400 per year. They put down $75,000 as their down payment and their total mortgage was $300,000. So their total monthly cost was $1,418. When you add the total mortgage and the condo fees, the total carrying costs are $1,968 per month. We were able to rent it out at $1,600 per month. So the net cash flow was actually negative $368, but this was a good investment. Even back in 2015, when Toronto condo prices were much lower, investors were still negative each month in their carrying cost. This isn't anything new. But again, we need to stop looking at just cash flow. We need to be looking at total return on investment. Now let's look ahead 5 years. The mortgage balance at the end of 5 years would be $245,000. The total equity built during this period would be just under $55,000. which would work out to $915 per month. So the total average net return per month would be a positive of $470. This is the true monthly return that investors, observant investors anyway, are looking at. What overall ROI does that translate into over 5 years? So to calculate your total ROI, you're going to take your total monthly return and multiply it by 60 months. Then you divide it by your total investment, which is your initial down payment of $75,000 plus your monthly mortgage payments that you've been making. That totals 28% total return over 5 years, or approximately 5.1% compounded annually. This is the number that matters, compounded annual return, and we haven't even taken into account appreciation. And who invests in a condo without the expectation that prices will rise over the next 5 years? So the profits would actually be much higher. Let's do a bit more math and get the total value with the price appreciation. Let's say we buy a condo today for $500,000 and we only assume appreciation will be 1% over the next 5 years. The total value of the condo at the end of 5 years would be $525,000. So the total net return for the investor over 5 years would be just over $53,000, which is the total ROI plus the appreciation. Therefore, your total net return would be 53.7%, or approximately 9% compounded annually. And that's assuming a 1% increase in the condo prices per year. For the past 5 years, condo values have increased 15 to 30% per year. Demand is at an all-time high. I'll save you the math, but if you assume a 3% appreciation in each of the next 5 years, that compound annual return jumps to 15.7%. So, before you just accept media headlines at face value and think the condo market in Toronto is doomed because all investors are bleeding, just take a step back and look at the numbers investors are really focused on. Because when you really do the math, there is still a lot of money being made, even if the media wants you to think otherwise. If this has you excited as I am, then let's do something about it. You can call or text me ready to invest at 416-807-8484 anytime. I've done this countless times before, and it's a strategy I stand by wholeheartedly.